Hey, this is Tony Chiu, Director of Sinosoft International. Today, I will cover a hot topic which creates a lot of market demand, which is IFRS 17 system. The topic today is readiness with life, general, and health insurance in mind. Beware of the word readiness. That's because IFRS 17 is an international compliance standard which is time sensitive by 2023. Before I start, let's have a quick summary of Sinosoft International. Sinosoft established in Beijing in 1996. In 2020, our revenue reaches about $6 billion, which is equivalent to 750 million US. Total staff in 2020 reaches 16,500 people, which is probably the largest insurance technology pool in Asia. We have in the insurance market contains about 90% market share in China. Sinosoft is a listed company listed in Shanghai Stock Exchange with stock code 603927. If you look at the major clients of Sinosoft, for general insurance, domestic property insurance companies are about 65, and international joint venture companies about 50, and other 80 life insurance corporations being Sinosoft client. Most importantly, Sinosoft also produced data processing systems for the insurance regulatory authorities in China. Let's look at the IFRS 17 background. Why we replaced IFRS 4, which was the current standard, to IF 17? What are the issues? And what are the proposed target goal for this change? And second, we look at the proposed solutions from Sinosoft. And based on the issue identified and the target we want to achieve, what are the solutions that Sinosoft can propose? And I mentioned IFRS 17 is time sensitive to 2023. Do we have enough time? To answer that question, we look at the implementation plan, which usually require. And in the end, I would like to share with you about the projects that we do and what's the best practice and the key learnings from there. IFRS stands for International Financial Reporting Standard. It is a common way for financial reporting across international boundaries to make business more comparable. Be aware of the word comparability. IFRS 4 started in 2005 as an interim standard specifically for insurance industry. But since it is targeted as an interim standard, it doesn't try to resolve everything up front. So subsequently, and IFRS 17 as a follow-on standards being drafted on. Based on the key learnings from IS4, the liability measurement and profitability recognitions are being two of the key areas which IFRS 17 try to achieve. The goal is to make it comparable and also transparent as an international financial standard. What's the problem with IFRS 4? Now, first of all, as an interim standard, you cannot compare the results of an insurance company between different territories. And it's hardly comparable between different companies as well. So comparison becomes difficult. What's the problem? The major problem here is the risk model. The liability model for estimating risk wasn't standardized. Now because of that, the figure coming out may not be comparable. The valuations of insurance liability is a problem too. And cash flow approach which commonly adopt in the rest of other industries may not be necessary in IFRS 4. Discounting of money from future value to the current value is not a compulsory. Now it is also a key deficit. Now the last, allowing of a historical assumptions built into various actuarial model will be detrimental. That makes, first of all, the comparability, and second, the transparency difficult. Now, IFRS 17 try to resolve it. Look at the IFRS 17 timeline. From 2010 to 2013, various drafts come out to give the industry an awareness of area to improve. In 2017, the third publication come out, which basically finalized most of the areas. However, from 2018 to 2020, still amendments being keep on it, especially the time of application being moved from 2021 to 2022 and then to 2023, the latest. So as of today, it is mandatory that by the 1st of January 2023, IFRS 17 will be applicable for all insurance companies doing practices and use that standard to report this financial report. Some companies, some countries like Thailand and China might consider themselves 1 or 2 years later as an extension to give the local company more time to prepare. However, for most of the insurance company, IFRS 17 is mandatory and time sensitive in 2023, which is the key. Before I go on, I probably need to cover some actuarial models in simple forms, and also that require a lot of insurance terminologies which I cover. However, I try to make it as simple as possible so that everyone can understand. Now, we mentioned a few times about liability measurements before. Now, when I buy an insurance contract, for example, $100, initially, all the $100 liability pass it on to an insurance company. So the insurance company take up $100 risk. Halfway of the policy, say mid-year, then half of the liability is gone because it expired, right? However, there's another half which is unexpired risk for insurance company. If you look at that, the first half of the liability might turn into claims. That will be some existing claims or incurred claims, what we call, which can be another liability created. We call liability measurement. So the liability measurement consists of 2 parts: the expired liabilities and an unexpired one. And also, and as a profit-making organization, you make profit. For example, $100 policy, the total liability estimated to be $80, so $20 can be considered as a profit under the IFRS 4. But that got a problem because $80 liability is only an estimation. We need to realize in the end to see whether the $80 estimation is good enough, less or more, before you can finalize your profit. So that means our profitability recognition also got problem, which need to be fixed, and it will be fixed under the IFRS 17 model. Before we go further, 3 actuarial model or measurement model need to be highlighted here. First one, the building block approach, BBA. Second, premium allocation approach, PAA. And third, variable fee approach, VFA. And I will explain it in a brief detail. BBA, another name is General Measurement Model, someone commonly call it GMM. It is a default model for liability calculations, which try to fix and highlight all the issues which we mentioned it before. And the key component here is the contractual service margin, CSM, to replace what we currently call the profit. Let's look at the detail. For the liability calculation, first of all, profit no longer mentioned. It's called contractual service margin now. And the first component of it is called the risk adjustment and also with the building blocks to highlight the liability for remaining coverage, which I mentioned before. The component 2 is also a risk assessment with building blocks similar to the component 1, but it is for liability for incurred claims. All elements of insurance has been highlighted here. First of all, the incurred claim part, LIC. The second one, the liability of remaining coverage. And the third one will be the profit, and highlighted in this approach. That sounds complicated, especially if you need to understand the calculation model and actuarial assumptions within each of the elements. For some insurance companies, say for example, it got short-term contracts, usually 1 year or less than 1 year, the calculation can be simplified. And this is why we create the premium allocation approach. Now the difference is when you compare the first part, instead of the CSM, we use the original approach of IFRS 4 acquisition cost plus the unearned premium to calculate the liability of unexpired risk. And however, for the second part, which is the liability of incurred claim, remain unchanged. That simplify at least half of the calculation and make it palatable for insurance company, which doesn't involve very complex long-term insurance. The third model, as I explained to you, is a variable fee approach, VFA. Now, this is specifically for investment-related participating business. It's very similar to the BAA approach. The only difference is including calculations of present value of an asset minus the administration cost of such a variable asset. Here is a summary table of the measurement model for the GMM, VFA, and the PAA. I don't want to cover everything in detail, but you look at 9.3 LRC and LIC, which summarize all the details of the actuarial calculations or the differences between the three models. Here, we finally reached a stage to fully understand in measurement model what's the difference between IF4 and IF17. Looking at the left-hand side, we have LRC, the liability of remaining coverage, which we mentioned it before. Put it this way, is usually called unearned premium in the current accounting standard. And the second one is LIC, liability for incurred claims, which is usually called the earned part, the earned premium. And in other words, it converted into liability, it turned into the IBNR, incurred but not reported yet. So it's estimation. It handled well in IFRS 4 and also in GAAP, which is the American standard. Both handle the measurement model in exactly the same way. Now look at the middle. The middle and the right hand side consists of two models which we mentioned before for IFRS 4. GMM or BAA, what we call. The first part, the liability for remaining coverage, has been split into 4 parts. The CSM, the RA, the discount, and also the cash flow, to make sure all the key elements are being calculated and separated and being disclosed in a separate manner. And for the LIC, the incurred claims part, it also split into the 3, similar to the top one, except it doesn't have the contribution margin because the contribution margin will be absorbed as one lump sum figure at the top. Now that means instead of 2, it's split into 7 different elements which need to be kept track of. The complication actually increase. PAA at the right hand side, as we mentioned, we try to simplify. It simplify the liability for remaining coverage, the old one, the unearned premium minus the direct acquisition cost, provided if the policy is 1 year or less than 1 year. But the incurred claims, especially the long tail claims, remain unchanged. Now that highlight the differences between IS4 versus IS17 and also highlight how the problem on IS4 being fixed in the new model. Besides of the measurement models, a lot of other areas also affecting the insurers by facing the IFRS 17. It includes the contract recognitions, contract modifications, a level of aggregation which include the grouping elements, risk adjustment which we mentioned before, discounting of future value into the current present value, a contract boundary has been redefined. And number 8 is more important, is very important, it's called the reinsurance contract, which is a lot of matching behind, and also the liability being shared, and how are you going to reporting it, are relatively complicated. And number 9 is the reporting and the disclosure. Now the reporting format has been changed, but that changed in terms of generating a report is not difficult. The difficult part is the data breakdown behind. Now we need to break everything into a contract level and very different grouping when compared with before. Disclosure, all the actuarial assumptions and financial models need to be disclosed clearly into the disclosure requirement. That make another levels of complications. From here, that puts a lot of pressure into existing systems. Someone estimated the normal operation expenses of an insurance company might jack up for 15 to 20% because of the IFRS 17, and mostly go into the system implementation and transition stage. After we've gone through a heavy issue, which is the IFRS 17 background, what is the proposed solution? What Sinosoft proposed? We looked at it from the end-to-end design level first, and then we look at the application architecture, technical architecture, and then have a summary on it. From the end-to-end solution design, Sinosoft break it down into logical manners. From here, you can see 6 columns, from left to the right, 6 columns. The first column is data source. It includes all the third-party data source from core policy administration system, research, finance, investment, and even big data systems provide the data source to the IFRS 17. And after we get all the data, it will group based on different boundary definitions, different grouping elements required in IFRS 17, and do tests like whether it is profit or non-profitable, whether it is a major test, and separate between the investment elements, and also most importantly, the expenses allocation need to be allocated at contract level. Now that form, the bottom part is called the data platform. After we get all the data sourced and converted into the data consideration column, the third part go into the actuarial calculation, which what we call the quantification platform, where different actuarial models, assumption data is being captured and kept into the system for reference. Now different factors might be re-entered again to make it as a new model and new scenario to make sure the generate figure fit the organization's requirement. And once it is done, we go into the fourth column, which is called the GSM amortization. As we mentioned before, CSM calculation is the final product, a very important product for IFRS 17 and also the company. Now, column 3 and 4 combined together is called the quantification platform. Now, since it is a financial accounting reporting standard, we need to handle the accounting as well, which is fourth. Very similar to a normal policy administration system. We've got a ledger, sub-ledger, chart of account, posting rules, and also generate internal reports. And subsequently to the 6th column, which is IFRS 17 specific statutory reporting, and satisfy all the disclosure, data display, and breakdowns. And also, one of the special design in the IFRS 17 by Sinosoft is the self-reconciliation. Now, it can reconcile internally from input data to the output figure generated in IFRS 17. And not only that, you can also put IF4 into the system for easy reconciliation. Now, reason being, your existing system will generate IFRS 4 reports. If the new system can also generate the same set of report, comparison will be relatively easy. And also it has internal built-in reconciliation to check up if there's any imbalance happen. Now, once IFRS 4 fixed, the new generated IFRS 17, and you can use the IFRS 4 to reconcile against IFRS 17 by multiple standard reconciliation. That's handy. That makes the transition so much easier. In the end, this is multi-currency systems where you can have your life systems, your general system, and health insurance system all put into one place. Then a consolidated group report can be generated. Basically, let me summarize again. At the bottom, we got data platform, we got codification platform, and we got accounting platform as an end-to-end design. The first column, the data source, relatively simple, provided with all the third-party systems data are breakdown good enough and ready to support for the IFRS 17 needs. The second part, column 2 and 3, is a moderate challenge. You need to know, you need to divide your data into a very consistent and organized manner, layer by layer. However, the column 4, 5th, and 6th will be a major challenge to most organizations, which is not easy, especially for the transition side to handle. Now we have a design. What's the application architecture? We got input from the left, which is the source, and output from the right, which is the existing general ledger or reporting system. And in between will be the IFRS 17, starting from a foundation. And then we have a data platform, which we mentioned before, and actuarial platform to calculate, to absorb the actuarial assumptions, and doing formula to calculate the actuarial or quantification result. And then we have accounting platform, which consists of the cost sharing module, and there's ledger sub-ledger module, and also the reconciliation module. And in the end, the IFRS 17 results being generated. Now, these results being generated can go into two places. It can either post to the external systems for general, before, vouchers being generated each day and posted into the external general ledger for reconciliation. Or internally, you can satisfy with it and generate report accordingly. So this system is self-sufficient to generate all the IFRS 17 report. And you can even generate management reports based on specific needs of an organization, but that needs customization though. Looking at the color here, most of the elements of IFRS 17 in Sinosoft system is ready, except some management report might need tailor-made during the implementation stage. Having looked at the application architecture, finally we look at the technical architecture which support the whole thing. Starting as a resources layer, which is a PaaS layer, is a cloud platform which provides the PaaS. It has a processing component, storage component, networking, and security. Nowadays, we put it into Huawei Cloud in Thailand, which we feel comfortable by using Huawei facility to provide all the facilities required for our IFRS 17. On top of that, you got the component layer and then application layer to satisfy all the development, automatic upgrade and release, service governance, monitoring, lock, and also authority needs. Let me emphasize again, IFRS 17 needs a lot of processing power and also storage capacity. And security is also necessary. The cloud platform probably would be a preferred platform for IFRS 17. And we are so pleased to be able to put it into the Huawei Cloud and to ensure its integrity. A key advantage summary that contains a lot of things. Let me quickly and briefly summarizing it. First of all, we think it is probably a good innovation for InsurTech, and also for compliance for IF 17. 2 years ago, we have experts in actuary, accounting, and combined with Sinosoft core competence in building enterprise system for insurance company. Second, it is a complete self-contained system, as I mentioned to you, so that it's non-intrusive to insurance company. You can start this project without affecting any of the existing change. Third, a flexible way for data input. We spend a lot of time to use different methods of getting data input easily. And we mentioned data platform, qualification platform, and accounting platform already. I passed it up. And number 7, it is a multi-company, multi-currency, and multi-language system for international needs. And I mentioned reconciliation before to ensure integrity, and also by design, our data is layer by layer, very clear to provide absolute transparency. The 9 is the advanced technology, which I cover from microservices, a cloud platform enabling to ensure the future technology being used currently for this latest system. I mentioned it more than one time that IFRS 17 is compulsory and time sensitive to 2013. It said too late to start. Now, to answer this question, let's go into a normal implementation plan that we usually used for IFRS 17. Now, first, for the client to prepare, they need to start user and IT resources group. They usually get a budget and get their own internal planning and get the contract ready. Now, after that, when the project starts, then the preparation stage will start, starting with IFRS 17 consulting, impact analysis to get the gaps, and then solution design. Implementation stage starts immediately, which can be 6 to 12 months. Why so different? That's because different company has different requirements. For normal size companies, 6 months may be enough, but for very complex issues, perhaps 12 months. Now that also affects the testing time, which is from 3 to 6 months. After that will be the lifetime. In IFRS 17, even the systems go live, you probably need a prolonged period to observe the result and make sure all the hidden problems being found out. And as a whole, usually it takes 1 to 2 years to finish an implementation project. For an average company, it's about 1.5 years. Now, if you target 1st January 2023 as our starting point, then probably it is high time because now is July 2021. Good news is for countries like Thailand and China, the government are trying to delay the implementation time to 1 to 2 years. Then you probably create 1 to 2 years buffer to your organization. But again, make full use of the time. Otherwise, it will be too late. Last but not least, let me share some of our best practices and key learning from doing various products. I mentioned IFRS 17 is complex and also very costly. It involves the actuarial system being revamped and make it transparent, and then pass it on to the financial experts and improve the financial system for reporting. But in between, it involves a lot of stakeholders, including IT, to make the whole organization work together and to achieve this goal. Very costly, however, it is compulsory. If we can make use of this opportunity to improve ourselves, to do business re-engineering, to make our organization better, then I think this cost will be well worth spending. By improving the consistency across the whole organization, centralize and standardize all data to make corporate data more available to management, and to reduce the reporting cycling time to make the whole operation more efficient. Now, if we can do that, then the IFRS 17 courses will be well worth. Key takeaways for various projects: start small, Start early and make it simple. How do you do it? For example, you have 10 priorities. Can be focused on the first 5 more important ones, finishing off, and make the rest as a phase 2 and phase 3. And second, as I mentioned, IFRS 17 needs a lot of modeling, recalculations, and need a lot of processing time and generate a lot of the temporary and permanent data storage. And it will increase your maintenance cost. If you use the traditional on-premises approach, then you need to invest heavily in your hardware. And also those hardware may be most of the times are redundant. Why not use a cloud? Why not use this opportunity to move it into the cloud platform? The third, mobilize a cross-functional team as early as possible, not just accounting or actuarial members. This involves the whole organization work together to make sure it's success. Call to actions. It is high time, as I explained, to plan your IFRS 17 projects as soon as possible. Be careful, including the transition planning. Second, contact your cloud solution provider. For Sinosoft, we rely on a Huawei cloud platform, both in Hong Kong and also in Thailand. Search for the best practice, shoot for the best team and also the best system to help you implement, because it is key. And form your company level of IFRS 17 team ASAP. That's the end of my presentation. Here listed my email and also my contact number in China and in Hong Kong. Any questions about this video, please drop me a line or call me up. And the easiest way to contact me is to use my WhatsApp. So do not forget to use my Hong Kong phone ID, put into WhatsApp. See you later. Thank you.